What's up everybody? Welcome to the Stocks channel. In today's special weekend update, we're going to take a more macro level view of the stock market. We're going to take a look at the S&P 500, the Nasdaq 100, the Dow Jones, the Russell 2000, and then we'll look at Bitcoin. This should give us a better macro level view of the broad stock market as a whole and to see if we're still bullish on this market. So first up, we're going to take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. All right, so first we're going to take a look at the S&P 500, and this is the SPX index. Now remember, each candlestick on this chart is 1 week's worth of price action because we are looking at a weekly chart. So the first thing I like to look at when we look at these weekly charts is to identify the trend. Right now, we still see that we're in a bull trend on the S&P 500 because all of these moving averages are still positive sloping and they're all stacked to the bull side. When I say stacked to the bull side, I mean that the faster moving averages are over the slower moving averages. So shown here, I have the 5 over the 13, the 13s over the 20, and the 20s over the 50. That means the trend of the market is still bullish because we continue to go higher week after week. Now, we're still going to see volatility in weeks that we have selling. That's normal in any bull market. But you can see the general trend on this weekly chart has never stopped being bullish ever since these moving averages started stacking to the bull side, going all the way back to about June 2020. So we had plenty of volatility and plenty of corrections along the way, but the more macro level view of the market is still bullish as long as these moving averages are stacked to the bull side. The next thing to look at is the price action, and we saw last week the price action did close back over the 5 EMA. So we had a very volatile 3 weeks, there's no doubting that. But it looks like we're back on the bull and we're well on our way towards our 2021 price target around 40.40. Now, if you're new to my channel, when I say we're looking for a price target, we're looking for price action to head towards that direction until that price target is met. Once we hit that price target, it opens up the possibility that we could see selling and possibly even a correction. If we start breaking and closing over my price targets, I will issue new price targets to the upside to start looking for the price action to start trending towards. So right now, we have to get to 40.40 before I give you a new price target. And when we get to 40.40, it's better to take a lot of risk off the table and get ready for a possible correction. The last price target I had on SPY was about 393, and we got just above that around 39.40 before we had this correction. So that price target was very important, and if you were watching that price target, you would have known to take a lot of profits off the table and get ready for possible volatility. It doesn't mean when we hit these price targets that we have to see volatility, but it's better to be safe than sorry, and it's better to take those profits and lock them in until we see confirmation that we're going to break out higher, or if we do see selling, we can always get in at lower prices. So the next target we're watching for is 40.40, and it looks like we're well on our way towards that target. Now let's also jump over to a monthly chart. So each candlestick is now one entire month's worth of price action. We still see a bull trend, and we still see the price action closing over the 5 EMA. Now don't forget, we're only halfway through the month, but things are still looking bullish, and we're still trending up towards that price target. So the monthly chart and the weekly chart agree that the market is still bullish for the S&P 500. Okay, next up, let's jump over to the Nasdaq 100, and we're looking at the NDX now, and we're on a weekly chart. So each candlestick is one entire week's worth of price action. We can see we did get that tech correction, and we had 3 weeks of selling. And 2 weeks ago, we did see the candlestick close right on top of the 20 simple moving average. So that's the 20 simple moving average on a weekly chart. So that represents the average of the last 20 trading weeks. Now, I posted this update on Twitter, and I said the last time we closed on the 20 simple moving average, we had a very bullish week the following week. Well, we didn't see an extremely bullish week last week, but we at least did see the price going higher, and we held up above that 20 simple moving average. So if we're looking at the trend, we remained bullish because the 5 EMA is still trading over the 13 EMA. Now, the price action is king. So if we did get a price action close below the 20 simple moving average, that would override the trend in the short term, and we would be looking for the Nasdaq 100 to come back down to the 50 EMA on this weekly chart. So that would have meant much lower prices if we did not close above that 20 simple moving average. So overall, that was a bullish close for the week, and we're back above the positive sloping 20 simple moving average, and we're still maintaining the bull trend. So this could be evidence that possibly the tech correction is over, and we're going to start trending back higher. So the next thing we're looking for is the price action to close back over the 5 EMA, and my 2021 price target for the NDX is all the way up there at 14,488. So from last week's close to that price target, we still do have about 12% upside before we're looking for the next major correction. Remember, we could still see volatility in selling as we go up towards that level, but we just want to know that the overall macro level trend is still bullish, and we are expecting to slowly drift up towards that price target. That's the whole point of doing these weekend updates, is we want to understand the macro trend, because sometimes we get lost in the day-to-day analysis and we forget about the more broad stock market trend. So it's a good thing to back up and look at this more broad level view of the market and see that we're likely still trending to much higher levels. So on the NDX, we still want to stay above this positive sloping 20 simple moving average to remain bullish. And it would be nice if we could maintain this bullish trend, because that means we're likely going to continue to trend higher. If we get into a situation where we're chopping around and trading sideways, that's still nice to know, but it's much better when we're in a nice bull trend and we can expect to see the prices trend higher. Now jumping over to a monthly chart of the NDX, we still see we're in a very strong bull trend, and for the month of March, even though the month is not yet over, we're still trading above the positive sloping 5 EMA. So the macro level view of the NDX is still agreeing that we're likely heading up higher towards new all-time highs to finish out the year 2021. Next up is the Dow Jones, and we're looking at DJI, and this is back to a weekly chart. So we see on the Dow Jones that we still have a nice strong bull trend, and we saw a very bullish price action week, and as of last week, we're closing very close to the upper Bollinger Band. That's a very bullish indication that the Dow Jones wants to continue to go higher. We see new all-time highs on the Dow, and we see very strong price action going with the bullish trending. On the monthly chart, we can see we're starting to get a little too far extended for the month of March, and if we continue to go higher, we're going to be getting outside the upper Bollinger Band on this monthly chart. That means we could see selling if we continue to go higher, or we're possibly even heading into a blow-off top scenario. Now these Bollinger Bands expand every single month, but we don't want to see the market go too far too fast, because it will pull back and it will go through a correction if that does occur. So don't forget also that the Dow Jones was very beaten up this past year, and it has a lot of ground to cover to catch back up to where the NDX and the SPX are. So just because the Dow Jones is going higher doesn't mean that it has to go through a correction. We just want to make sure that it doesn't go too far too fast. We can see on the monthly chart we still have a bull trend, and the price action is still trading over the 5 EMA. On the Russell 2000, we also have a very nice strong bull trend here, and we saw the week close out well above the 5 EMA, also at brand new all-time highs. The Russell's looking very strong on this weekly chart, and we see a very healthy trend with very good price action. The upper Bollinger Band still has more room to run here, and like I said with the Dow, those will continue to expand week after week. Now jumping over to a monthly chart of the Russell 2000, we can see that we're basically going parabolic, and we've been climbing month after month after month, and the Russell 2000 just continues to outperform the rest of the market. Just like I said with the Dow on a monthly chart, it does look like we're getting a little too far extended above the upper Bollinger Bands. We can see the past 3 months in a row have much higher wicks above the close of the candle, and that's because they were getting too far extended above the upper Bollinger Band, and we saw a little bit of retracement. Every month the Bollinger Bands expand, we continue to see overextension and then some selling into the end of the month, and we see that trend playing out for the last 3 months in a row. So it's safe to say that if the Russell continues to climb higher, we could expect to see selling in the Russell 2000 going into the close of this month. It would look very similar to the last 3 candles, and we would end up closing the month with a large upper wick coming out of the top of the body of that candle. That doesn't mean it has to happen, but it is a good probability that it will happen, because the Bollinger Bands are eventually going to show that the price is too far extended, and we will see profit takers and possibly even short sellers on the Russell 2000. So keep that in mind if you're bullish on the Russell 2000, that it is getting a little too far extended on this monthly chart, and it could see selling going into the remainder of the month. Also, if I zoom out here, there's a very nice trend line that was calling the top on the Russell 2000 for many years. This trend line starts all the way back in 2010, and it called the last top around 2018. As you can see, that trend line did break, so it's no longer resistance, but this trend line could now be turning into support. So what that means on the monthly chart of the Russell 2000, don't be surprised to see the price action come back down and try to retest that breakout as support before it can continue to go any higher. So that's also showing that the Russell 2000 could be running out of upside before it will need to go through a correction and come back down and possibly retest that breakout. Remember that none of this guarantees that it has to happen that way, but it is something to consider. Next up is Bitcoin's weekly chart, and we see Bitcoin also looking very bullish and having a very bullish price action week. The trend is still strongly bullish, and you can see these moving averages on this weekly chart are practically going parabolic. There's a ton of separation between these moving averages, and we're getting way far above the 50 EMA. Remember, this is a weekly chart, so this is a macro level view, and it means we're getting very far extended on Bitcoin. My price target I have on Bitcoin that we have not yet met is around $62,500. Whether or not we go above that price target or not is to be determined, but you can see that we're getting really far extended at these levels, and we're currently trading at the top of the Bollinger Band. We're not above the Bollinger Band just yet, and there is price targets above this price target if we do close above it. So I'm not saying that Bitcoin is running out of steam, it's just something to consider because it is getting very parabolic even on this weekly chart. Jumping over to a monthly chart of Bitcoin, we see a much different picture. We do see Bitcoin getting way too far extended over its upper Bollinger Band, and we saw last month when that happened, we did see a huge sell-off, and even though we did still close over the upper Bollinger Band last month, you can see at one point in the month we were trading much higher, around 58,500 before the selling started. So looking at this Bollinger Band, we were outside the upper Bollinger Band at the beginning of the month, and now we're way outside the upper Bollinger Band in the middle of the month. So when Bitcoin gets to my price target at 62,500, I would not be surprised in the slightest if it did trigger a lot of selling. Look how far extended we are, and look how parabolic we are on this monthly chart. You can see the 5 EMA represents the last 5 months in a row, and it's essentially a straight line up with absolutely no signs of slowing down. Remember, none of this means that Bitcoin can't go higher and can't defy gravity for a little bit longer, but it is showing there's increasing risk in these markets, and you don't want to be chasing these markets if you're not already in them. Just like I showed you with the Russell 2000, it's completely normal to see selling near the end of the month when we get this far extended. So let's just recap this and let's go back to the SPX. On the SPX monthly chart, we can still see we have plenty more upside, but we are coming very close to one of my price targets, and I did have this price target for my prediction for the year 2021. So from where we closed on Friday to my 2021 price target, we have about 2.5% upside left before we get to that level. Now, whether or not we trigger a correction when we get to that level or not is to be determined, but that would be a great time to take a lot of risk off the table. Remember, I showed you the Dow Jones, the Russell 2000, and especially on Bitcoin, it does look like we're getting pretty far extended on some of those monthly charts. Usually the broad stock market corrects together, and it's going to dictate whether or not we see much lower prices or if we continue to defy gravity and continue to go up parabolically. Remember, it's possible we continue to go higher even though those charts are showing that we're getting very far extended. The market can stay irrational for far longer than you would expect, and don't assume just because I'm showing you parabolic charts, it means we have to go through correction. So right now, the way I'm playing this market is we're still in bull trends and we still have bullish price action. As long as we have bullish price action and bullish trending, I'm going to remain bullish. It's the easiest way to make sure you're on the right side of the market. I don't believe in calling tops, and I don't believe in guessing. The price action and the trend are very objective, and that's why we're being bullish. A lot of people try to add their fundamental take of the market, and they try to predict where the market should be based on some fundamental thesis. And as you've seen from last year, those people are generally wrong on the market. I'm not saying that to be mean. I'm just saying that because it's true. If you think the market should be going lower and you're wrong and the market continues to go higher, eventually you have to realize that it doesn't matter what you think. The market's going to do whatever the market does. As long as we have money continuing to flow into this market, it's going to continue to trend higher. As you all probably already know by now, the stimulus was passed and there's going to be a lot of liquidity getting continually pumped into this market. Now again, that doesn't mean the market has to go higher, but with the general trend of the market and the bias is already in the bullish direction, and assuming that a lot of that money is going to enter the market, it wouldn't be surprising to me to see the market continue to go higher, and I wouldn't be surprised to see the SPX hit my price target at 40.40. Remember, it's only about 2.5% away before we hit that level. It's very likely we could see that level next week. So I'm still bullish on this market because the charts are still telling us to remain bullish. And if you've been following along with my daily technical analysis, you saw that we also saw a critical tech breakout, and we did get a confirmation of that breakout as support. So with tech joining the party and these big blue chip tech names possibly getting ready to run, it will be no surprise to see the S&P 500 possibly even blast through this price target and go even higher. So we'll play it day by day, and I'll continue to do my daily technical analysis to make sure you're always on the right side of the trade. This should also be a very great trading week. Whether the market goes up or down, there's always going to be trading opportunities. So if you're looking for a trading community or you're interested in my trading ideas, come check out the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of the video. So I hope you all enjoyed my special weekend update, and I hope you had a great weekend. I'm looking forward to a very exciting week ahead. So enjoy the rest of your weekend, and as always, I will see you in the next episode.